your mortgage payment could spike by nearly $1,000 next month. Not because you moved, not because you bought more house, but simply because your mortgage term just ended. And while most owners instantly think sell before it gets worse, selling right now, this specific market might be the biggest mistake you can actually make. So with the prices down by more than 6% and listings are up by more than 16%, there is a smarter way to fight back if you know where to look. Are you ready to see the options that they're actually not telling you about? And if you're like many homeowners all across Canada right now, your first thought is, I have to sell the house. But I want you to hear this super clearly. Selling under pressure is often the worst financial move you can actually make, because most of the time the other options are not discussed and you have not been shown them. So let me do that. I have been talking with many homeowners all across Canada who are getting renewal quotes and feeling super stressed. And the ones who do best are not the ones who panic, they're the ones who. So today I'm going to walk you through 6 mortgage strategies to try before you even think about listing your home, because that's the last thing we need to do under pressure. This is not about hiding anything from the lenders. It's not about gaming the systems. It's about actually making smart early choices with clear numbers you can actually trust. All right, so let's get into it. First, a bit of context. So, in between 2020 and 2022, a huge number of Canadians locked in a very low mortgage rate. Then inflation surged in 2022, and the Bank in Canada responded the only way they actually could, by raising interest rates super quickly. The result is extremely straightforward. People who were paying around 1 to 2% a few years ago are now facing renewal rates in the mid fours or sometimes around 5, depending on their deals. And even though the rates have pulled back a bit from the peak, this jump is still shocks many. Here, what most people actually do not realize: this is not a slow drip of mortgage renewals. It's a huge wave, and massive numbers of mortgages are coming up for renewals between now till the end of 2026. So it feels like everyone is suddenly stressed about the renewals. You are not imagining it, because everyone renewing, right? The market vibes is not easy money anymore. So when someone says we are at the top, sell now, rent, buy back later, that actually, it's oversimplifying it, because when you sell, you don't just cash out the house. There are quite a few real costs involved. So you have realtor commissions, you have legal fees, you have moving expenses, and potentially you will have some repairs, you will have staging. Sometimes you have a hefty mortgage penalties. Then you rent at today's high rent market. Don't just auto-renew your mortgage. This is the most common mistake I see. Your lender sends your renewal offer, it looks official, it sounds urgent, and many people just sign it because they feel that overwhelming feeling. But the first offer is rarely the best offer. Lenders actually count on you to take the easiest path out. And here, what you actually do: you shop at your renewal, you compare different offers from different lenders, and you negotiate. And its negotiation is not your thing, don't worry. Get a mortgage expert to run the numbers and the option properly for you, because even a small difference in rate can actually save you hundreds every month. Let's move into the next one. Never assume the first renewal offer is the perfect deal. It's just, honestly, your starting point. The next thing we can do, we can extend your amortization to breathe easier and get your lower payment. I get it. People hate hearing this because, yeah, longer amortization means more interest over time. But if you're feeling that pain, that squeeze right now, this can keep you in your home. If you have 20 years left, extending it to 25 years can lower your monthly payment significantly. Sometimes enough to turn that panic off into the breathing room. Think of this like temporary life hack, not a forever plan. The goal is not to pay interest forever. The goal right now is to stay in your home, to stay stable, and get yourself a little bit more time. Then, when things improve, when your income grows, or potentially the rate will go down, or your debt shrinks, you can tighten things up again. But if your choices are extend amortization versus sell under pressure, I know which one I would choose. At least run the numbers before you decide. Another thing that you can do if you have a variable rate mortgage, get clarity now. Variable rate mortgages affect people differently. Some people saw their payments rise as the rates went up. Others had a fixed payment variable mortgage where the payment actually stayed steady, but the mortgage balance did not drop as quickly as expected. Some even found themselves in negative amortization, paying mostly interest and not reducing principal like they thought. So if you are in variable rate right now, you need to figure out what is my actual amortization today, not when you signed your mortgage. You need to know your amortization right now. So please ask your current lender what happens in renewal if rate stays this high. For some, locking into fixed rate at the right time brings peace of mind. For others, staying in variable may still make total sense. This is not about guessing the market. It's about your comfort with the risks. If rising rates have you anxious every month, stability might be worth it more than chasing that perfect rate. Please don't ignore variable mortgages and just hope it will fix itself. Get the numbers. The next one, simple but extremely powerful move. If you have extra cash, even if you have a little bit, use that strategically. Many mortgages let you put a lump sum payment once a year. Increase your regular payment, switch to biweekly payment. You don't need to do that drastically. Even a small extra payment can actually reduce interest and build equity faster. And equity actually means more options for you. More equity can help you at renewals. It can help you if you need to refi. It can help you to avoid that feeling trapped. If your budget allows, please check what prepayment options you actually have and how you can use them. Okay, so the next thing is talk to your lender early. Don't wait until it's super urgent. A lot of people avoid this because they are embarrassed or they feel this anxiety, they feel worried, they don't even want to go and talk to their lenders. You absolutely have to. Lenders don't want you to default. Like defaults are expensive for them, they are complicated, they're stressful for absolutely everyone involved. So if your renewal is coming and you already know it's going to be hard, don't wait for the final 90 days notice. Start the conversation 6 to 12 months earlier. So earlier talks give you actually more options. You can plan to adjust the mortgage terms, you can change your amortization, you potentially can switch products, you can bundle all the debts carefully or even change your lender at renewal. But here is the things. Options shrink when you wait until you are behind. So please take all the emotions out of it. This is not about your pride, it's really just about smart play. And of course, if you need to sell, do it strategically, not out of panic. Sometimes selling is actually the right move. If there is a separation involved, if you're dealing with a state, if you're relocating, if your home no longer fits your life, if your payments are crushing you and absolutely nothing else works, selling is not bad. Panic selling is. So if selling is your answer, do it on your terms, which basically means know your mortgage penalty before you list. Know your net proceeds after fees and costs. Have a clear plan for what comes next before you sell. And don't rely solely on rent now, buy later as you plan, because the market moves on its own schedule. You cannot predict the market. And the biggest regret is not selling, it's selling with no clear next steps and scrambling to rebuild your plan after the fact. Okay, so let's wrap this whole situation up. If you are wondering what if the market absolutely crashes and you feel the urge to sell just to feel a little bit safer, please pause. Because fear is not the strategy, like we've said before. Preparation is. Before you list your home, do these three things. Please get your renewal option reviewed early. Do not just wait for auto renewal. Run your payment scenario. Try different amortization terms, fixed versus variable, based on your actual numbers. And please make a plan for your next housing steps that does not depend on the timing the market perfectly or even timing the market, because almost nobody times it right. And please remember this, you did not do anything wrong. Many people bought when the rates were low. You made the best decision you could make at that time. What matters now is what your next steps are. Please plan early, stay calm, make a move you can live with for the next 5 years, not just the next 5 weeks. Thank you for watching, and if your renewal is coming soon, start early. You will thank yourself later.